Good afternoon. I'd just like to take a moment to thank the Luxembourg and sustainable finance community for your support during these last difficult months since the tragic passing of LuxFLAG's general manager, Sachin Benkalis. As you know, Sachin was a great person, great human being, and a tireless supporter of sustainable finance. So thank you all for your support. As chairwoman of LuxFLAG, I'm very pleased to see that after 2 editions, the LuxFLAG Sustainable Investment Week has already gained recognition, and that is thanks to LuxFLAG's associate members who are showcasing this week where they are in the sustainable finance journey. So this week is really all about sharing best practices so we all advance towards the goal of making all finance sustainable. For this 3rd edition of the LSIW, we'd like to thank you for such a positive response with our 3,500 registrations for the week, which is pretty amazing. And I'd like to thank our host partners and media partners as well. For the 25 sessions over the week, we'll cover, of course, the latest trends and the most pressing issues in sustainable finance. And we hope you find them useful and inspirational in terms of helping you make progress in the journey, again, to sustainable finance and making all finance sustainable. So 2 housekeeping points: the slides and the recording of the sessions will be made available to you in a week or so. And please do ask questions. That's at the bottom right of the screen, the 3 dots. Just click on the 3 dots and you'll be able to ask your questions there. So I'm very pleased to be able to introduce this session hosted by NN Investment Partners. And this afternoon we'll be hearing about ESG integration within sovereign fixed income, which has been something of a new frontier to explore, but I'm happy to see organizations such as NN Investment Partners developing standards to measure and analyze these important markets from a fixed income perspective. So speaking on behalf of NN Investment Partners today is Edith Seyerman, Head of Fixed Income Solutions, Specialized Fixed Income, and Responsible Investing. So Edith, the floor is yours. Thank you.
Thank you very much, Denise, and thank you all for joining this session. And indeed, I'm very pleased about this important topic. So indeed, when we talk about, let me see, the slide works. Can you move to the next slide? Yeah, it works. Indeed, when we talk about ESG integration, I think the good question is, or the first question to answer is, how common is it to integrate ESG in sovereign bond portfolios? And yeah, if we look today at ESG integration, it's very common to integrate ESG in equities. Stewardship codes and also voting practices bridge the gap there and made it a small step to integrate ESG. From equities, we moved into fixed income, and also it was not a big step to move to integrating ESG in corporates, because every policy you apply to equities can be applied to credits as well. Only voting is different. So that bridge was also not too far. But when it comes to ESG integration in sovereigns, there seems to be so far little attention. Little attention from investors, from asset owners, but I think also striking to see a little attention also from the regulators. Regulators so far, if you look, for example, as SFDR, is also very much focusing on credits, equities, rather than sovereigns. So also from that side, we see limited attention. So then the question arises, is there a rationale to integrate ESG in sovereign bonds? If there wouldn't be, then it's explainable that there's limited attention. But I think that the contrary is true. If you look at sovereigns, they are a key stakeholder in the transition to a more sustainable world. They are also the policy makers in general, but also when it comes to climate, they are setting the policies. And if we look at, for example, at Brussels, we see that there's a lot about sustainability on the agenda there. The taxonomy, of course, regulation, and a lot is happening. But then again, it looks, and that may be my impression, as if it's more about prescribing corporates and also investors how to act, but less so to the question, what are sovereigns doing themselves? So I truly feel that bondholders have a role there to focus on what sovereigns are doing themselves and use their money and also their voice to make sure that sovereigns act themselves as well. And that is not all, because also if we invest in sovereign bond markets and we look at the factors that we analyze for determining the future performance, it's also, to me, very clear that ESG factors are very material factors when analyzing sovereign bond markets. And also, from that perspective, it makes a lot of sense to integrate ESG in sovereigns. So if you agree with me that, well, it's time to step up the efforts there and start to applying ESG integration in sovereigns, then of course the question pops up how to go about it. And yeah, of course there are many ways to integrate ESG. There's not one way, and therefore, yeah, I'm just illustrating the way you could go about it. And yeah, of course, I'm illustrating the way that we integrate ESG at NNIP. Just as an illustration, I will talk about ESG integration as such, but I also took the opportunity to talk about an impact strategy that we developed using green bonds, sovereign green bonds, and also talk a little about the net zero strategies we have developed in combination with a client of ours. So let's start with ESG integration. Like on the equity side and credit side, our ESG integration process consists of 3 steps: exclusions, ESG analysis to integrate within the country allocation decision, and engagement. And yeah, I think it's obvious that the second part, so the ESG analysis as input for our country allocation decision, is the main step in this process. So I will start there. Like in equities and credits, the first important step is to gather information, gather data, and make sure that you transform that data into information. And that's a logical step to take, and also one that we took at NNIP. We developed our own what we call Sovereign ESG Lens, which gathers information in a way that makes sense for us, so that when we start analyzing the markets, we have the input that we need. And yeah, what you see on the slide is the setup of this Sovereign ESG Lens. And if you can, as you can see in the blue boxes, the lens consists of 2 parts. One part is what we call the development score. It basically says how developed is a country in terms of ESG. So what is the level? But just looking at the level of ESG integration, of ESG, it doesn't tell us much, because often the more a country is developed, the more the ESG level will be. So we need more detailed information, more granular information. And that's why we have defined 5 risk criteria. So 5 risks, and we'll explain that later, that we feel are critical when analyzing sovereign bond markets. And we assess countries on these risks and also the extent to which they have mitigated these risks. And based on that, we define also a stability score, which then indicates how stable this country is going to be and currently is. And these are the main steps that we take when gathering information. And well, to make it all a bit more concrete, I took an example of, for example, Turkey. Perhaps you can't really read the diagrams, but that's not necessary per se. You see the two blue boxes in reality here. So one box is the development score and the other box is the stability score. Turkey scores very average compared to its peers when looking at the development score. So there's nothing striking or remarkable about it. But when looking at the stability score, we see that Turkey is scoring less well. And that is explained in the next chart. Well, here you see the 5 components of this stability score. So as I said, we identified 5 risk areas that are material for our ESG analysis. So we identified violence and terrorism, fractionalization, socioeconomic tensions, political unrest, and natural disasters as 5 risk areas. And as I said, we look at the current issues there, but also the mitigating factors. And you can think of perhaps the political stability as mitigating risk factor. And here you see that Turkey scores particularly low on political unrest and violence and terrorism. And that's why, the total score of Turkey will be lower than the score of its peers. What we also do, and that's important to add, and that's what you see on the bottom of the right part of the chart, is we incorporate big data. Because typically, even though institutions like the World Bank are doing an extremely good job in gathering information, data on sovereigns is often lagging. So it's very interesting to add big data to the data that you use to flag issues that are an issue currently. So make the information a bit more up to speed. And that's what we did with Turkey as well. And you see it better in this chart. So here we looked at big data for social unrest, and we see typical, clear spikes in this data, flagging that the social unrest is increasing. And therefore, we even deducted sort of points from the total score for Turkey to show that, there are issues currently which we should take into account. So this is, very much the starting point of our analysis. But then again, we feel that is not enough, because just looking at the level of the overall scores, also including the stability scores, is information. But as investors, we rather look at the improvements in the scores. And we truly feel that that makes sense both from an investment point of view, but also from a sustainability point of view. Because a country can score at a certain level, but real changes in sustainability and improvements in the transition will occur if the momentum is positive. And also from an investment point of view, you rather invest in countries that are improving than countries that are at a certain level and don't act anymore. So also from an investment point of view, that's much more interesting. And we truly feel that when looking at momentum, both sustainability performance and investment performance go hand in hand. And that's why we plot, and this is an example of the EMD universe, we plot the scores, but also plot the momentum of the scores. And this chart is very helpful in determining, what countries are probably not there yet, which is not strange in an EMD universe, but are making a big effort to improve. And these are typically countries we're very interested in. And that's how, we analyze the sovereign markets, and that's how its information is gathered into the country allocation decision. Of course, besides ESG integration in the country allocation decision, we typically, as responsible investors, also like to use our voice, not only our money, to put things at work. It's clear that engagement with sovereigns is not easy. It's not common and not easily done. But yeah, we'd like to turn it around and say, well, let's see what we can do. Of course, there's a lot not possible, but let's at least try and do what we can do. So we find it important also to try and have a dialogue with sovereigns. And for us, it's clear that when it comes to sovereigns, it's important to team up with other investors and jointly raise the issues that are out there. And yeah, in that way, try to use our voice as well. So we did already in some cases, and some examples that we have are around Indonesia and Brazil, where together with other investors, we used our voice and issues that are out there in Indonesia and Brazil are addressed by this group, and led at least to attention of the policymakers in those countries. Also, if you invest in green bonds, we also feel that because countries are issuing those green bonds, they're also open to communication around ESG logically. So that's, I think, a good bridge to the next strategy I'd like to discuss, which is creating impact in sovereigns by using sovereign green bonds. And for those less familiar with green bonds are instruments for which the proceeds are used in climate-related projects. So by investing in green bonds, you have a direct impact on the real-world climate change, so to say. That's why we say that by using green bonds, you can create impact strategies. The good news is that this market is growing extremely rapidly. 2021 will be a landmark year when it comes to sovereign issuance. We saw a very good deal of Italy. It was 10 times oversubscribed. And we saw the first issuance in Spain and the UK. Around today or this week, the EU will also launch a green bond related to the EU Next Generation program. We expect the EU to become one of the largest, maybe the largest green bond issuer in the short run, because they have stated that 1/3 of this program will be financed to green bonds. So it seems quite a European ball game, but the good news is that it's also expanding, for example, in China. China is having a net zero target and a commitment to 2060, which is obviously good news. And what's also good news is that they have changed their legislation of their green bond issuance to legislation that is more in line with the European legislation. So it seems we're heading to a global standards for the issuance of green bonds, which is very good news. And yeah, we expect this market to grow very, very fast and further. So this gives a lot of opportunities for sovereign bond investors to derive impact there. When investing in green bonds, we feel it's important to stress that you always need to do your own homework. It seems easy, just buying a green bond and we're done. But unfortunately, that's not the way it works, at least not up until now. A green bond needs to be assessed on the basis of the green bond principles and also the climate bond initiative principles, so to say. You can get a second opinion, in some cases certification, but up until today we strongly feel it's important to look into those characteristics of the green bonds yourself and assess them. On top of that, we also feel it's important to look at the overall policies of the country that is issuing. Because if it's just a one-off issue suddenly in something green and it's not part of a larger plan, not part of a larger idea, then we're less inclined to invest in it because we feel it's close to greenwashing. That's why we also analyze the country as such, analyze the country's plans and ESG performance, again using our ESG lens, and assess the credibility of the green bond issuance, so to say. And on the right-hand side, it's still very important to make an analysis of the sovereign itself, because the investment risk at the end of the day is around the sovereign as a whole. You cannot claim any proceeds of the green bond itself. You have a credit risk towards the sovereign as a whole. So you still need to do your homework also in terms of the normal analysis of the country, which again includes ESG factors. But that can be done, but we strongly feel that should be part of the investment strategy. Here you see the composition of the market. Well, it's just to notice that if you invest in green bonds, you should be aware that the duration of those green bonds are much longer than the average of the total market, so more around 12 years than around 8.7 years of a normal index. We're often asked about, is it worth investing in green bonds? Do we have to pay up for investments in green bonds? And on the left-hand side, you see the performance of the green bond market, and on the right-hand side, a yield curve, in this case of Ireland. And in both cases, you can see that you don't have to sacrifice returns for investment in green bonds. So in other words, we strongly feel that sovereign green bonds are a great means of and a great way to achieve impact in sovereign bond markets. Then moving to the last part of my presentation, it's a net zero strategy for sovereign bonds. Again, when talking about net zero, it's a topic that is high on the agenda of many investors. It's a hot topic, so to say. Again, there's little guidance or discussion up until today how to apply it to sovereign bonds. What did we do? We looked at the IAGCC guidance for corporates and equities and sort of translated that for ourselves in, what would that mean for sovereign bonds? The guidance, it's a broad guidance, but the executive summary is that you need to reduce emissions on the one hand and have a clear trajectory in mind, and on the other hand, invest in green solutions. For sovereign bonds, it means that you have to measure your emissions And yeah, there already we have some challenges in the sense of, yeah, what kind of emissions do you take? Do you take the overall emissions of a country, including the private sector, or do you take the emissions of the sovereign itself? Or should you include the emissions that are linked to the imported energy? So there are many questions around, well, the right measurements for emissions of sovereigns still. There are many discussions going around, but we're not there yet. We tend for now to use the smallest definition of emissions, so just looking at the sovereign itself. And then comes the question, so what do we call green solutions for sovereign bonds? Yeah, so there's not a clear guidance there, but what we did is, yeah, look at the information that is available in public sources and that can help us. We identified a number of very helpful public sources. For example, the German Data Watch Climate Change Performance Index, which looks at different components of, well, current emissions of a country, renewable energy uses, and, for example, also, well, the policies and the plans that sovereigns are making. Are they credible? That is also done, for example, by the EIU. So they look at, well, the net zero commitments of countries and see how, yeah, how committed are countries. Is it part of a legal framework, or, yeah, do they have clear targets communicated yet, or are targets still in discussion or not? So that's also a very helpful source. And, well, the strategy that we have developed for a client is, well, on the one hand, look at the emissions, and on the other hand, perform a best-in-class kind of strategy in which we, yeah, use the data that I just mentioned and transform that in a NNIP, what we call country climate score, incorporating all the information that we have on the commitment of countries to indeed commit themselves to a net zero policy. And yeah, then we, in the strategy, we say, well, the score on this NNP country climate score should improve every year. And of course, it will be reviewed also during the process, whether, yeah, we should make any changes to it and whether we are still on the right path. Also in a strategy like this, again, sovereign green bonds could play a very important role as well. Of course, you can use green bonds also to, yeah, to achieve this net zero commitment. So yeah, that brings me for now at the end of the presentation. Yeah, I hope that you agree that ESG integration in sovereigns is important, that we should put our money and voice at work, and yeah, that it's also, and that's also, I think, important to get across, that it's also doable to develop strategies. They may not be perfect yet for several reasons, but yeah, I think it's feasible enough to implement ESG in sovereign bonds. So yeah, I think, Denise, over to you.
Thank you very much, Edith. Yes, thank you. That was really interesting, and thank you for taking us through that. As you say, it's not something that we hear a lot about, but of course it is very important, especially given, you know, the net zero strategies that keep proliferating around the world. So we need to make sure that they put their money where their mouth is, as they say. So, and I actually, of course, it goes completely along with what the comment I made earlier about the journey, because clearly these sovereigns are on that journey as well.
Yeah.
There is a question, and the question is, it kind of goes back to when you were talking about the NN IP Sovereign ESG Lens, I believe. How do you tackle the data challenge? We all have, but again, you probably have even more so with the sovereigns.
Yeah, true. So it's very true that, information is often, older. In our ESG lens, we not only use publicly available data, but we also incorporate big data to make sure that we, of course, that's not available for every data point, but at least for critical risk factors, it helps us to make the latest scores more accurate. And also when using that kind of data, of course, it's extremely important also to use your own analyst, sovereign analyst, to assess the latest developments in these countries, which may not be reflected in the data that you use in the score, but see it more as the basis and the starting point of an analysis rather than the ultimate truth. So I'd rather use this as a starting point than steering portfolios based purely on those scores, because then you might indeed create a strategy that is a bit outdated. And we feel it's very important to use, the latest insights of your strategist and sovereign analyst to make sure that, you have a true vision on the ESG performance of a country, and incorporate that very much in your end decision. And that also means, and that's what we do in whatever ESG integration process we have, is make sure that the knowledge, the ESG knowledge, is incorporated within the investment teams. Of course, we all have responsible investment teams that can truly support us in many ways. But when it comes to decision making, it's the ultimate responsibility of an investment team to weigh the ESG factors against, the other probably more financial factors of a country, and make sure that the analyst and decision maker in teams have the information that they need to make these decisions.
I can imagine that in certain parts of the world, even it's not new that focusing on governance has probably always been relatively important in terms of putting your money in a country where you don't want it to be what's the word, appropriated or what have you, private or whatever, not privatized, made public, whatever that word is. But
but also the other factors, not just governance. Of course, governance, is, and that holds also for corporate or equity investment, and also for sovereigns. Governance has always been important. But I'd like to stress that E and S factors have been important as well. But in the past, before we were capturing E and S factors in data that you can track, that you can use, it was much more a qualitative assessment. And nowadays, with ESG data, we can not only make a qualitative assessment, but have a more consistent way of analyzing those factors. and using them more in a quantitative way, not only in a quantitative way, because the final assessment of an analyst is crucial, but in that way creates more consistency in the way we analyze also ENS factors as well as G factors. So have a better founded opinion on those factors. So I think that's true for ES and G factors.
Yeah, and to be more objective, as you say, as well. Yeah, to benchmark probably as well, very important. You mentioned the green bond, obviously the uptake in by sovereigns in issuing green bonds, and and obviously you're aware, of course, of in Europe, of course, the sustainability bonds, right, as well. And is that something that I see already happening in other parts of the world, other sovereigns? More than just green bonds, some more sustainability bonds?
Yeah, we're both green bonds and sustainability bonds. Well, the issuance is increasing. Also social bonds. That might be also a new area to step up the effort. That's all increasing, and I think for good reason, because like any investor, we're seeking true impact. So that makes a lot of sense. It's true, though, that looking at green bonds, there's more work done in terms of the principles. So what is required to issue a green bond? How do you ring fence the proceeds? How do you report? So there are many more principles that apply to green bonds than to other ESG types of instruments, which makes it, as an investor, easier to do your homework than in a less organized, so to say, market, where you have to do the assessment fully yourself. Whereas on the green bond side, issuers and also institutions like the climate bond initiatives are truly stepping up the efforts, and also the EU, of course. They also come up with their green bond standards to harmonize the market. And that's of course very, very helpful. And so it's very good to understand if an issuer, no matter whether it's sovereign or a corporate, issues a sustainability bond. It's good to understand for what reasons they didn't choose to make it a green bond. Why not adhere to the standards that apply to green bonds? But it's a market that is growing, and I think as bond investors or fixed income investors, we should be very happy with these instruments, because our market is unique for having those instruments. They're not available on the equity side. So that's, I think, very good news for anyone that wants to invest responsible on the fixed income side.
And actually, there was one question I had when you were explaining on the green bond side of things. You mentioned that the duration of the green bonds are generally, the term is a bit longer generally than the non-green bonds. And I'm just curious, I didn't realize that. Why is that?
Perhaps of the fact that there's that the market is growing rapidly, and you typically issue a long-dated bonds rather than a shorter one. So if the market is growing, I think it's more technical effect that the duration is typically somewhat higher. I think that's the most important effect. It's something what you can overcome, but it's good to be aware of it.
Okay, no, thank you. I just wondered. I see there's another question here. What is the relationship between the SDGs and ESG for sovereigns? I guess how much are sovereigns paying attention to the SDGs?
SDGs. ESG performance. Is of course related to SDGs, but having a sound, for example, climate policy in a country does not necessarily mean you contribute to an SDG. So yeah, I think it's good to take them separate and see if you are have your house in order. I think that's more around ESG performance instead of am I really making a contribution? I guess I've never tested it, but I guess if you would look at the ESG momentum, perhaps you see more of a relationship with contributions to SDGs. I think that would be interesting to check. But there are, SDGs and ESG are different factors.
Okay, no, for sure. And I see another question, asking about the relationship to SFDR, so the Sustainable Finance Disclosure Regulation.
Yeah.
I suppose, and are there any particular challenges, I guess, for the disclosures you have to do in respect to SFDR?
Because there is very little guidance coming from SFDR at this moment with regards to sovereign bonds. So yeah, what we do is try to translate the requirement for corporates and equities into sovereign bonds. So we currently, we're defining what is a sustainable sovereign bond. Then we look at SDG contributions indeed to define sustainable sovereign countries. You have to look at doing no significant harm. And that's where more exclusion criteria come in. But that is sort of the translation that we try to make from the much more detailed requirements on the corporate side. But it's striking to see that it's lagging because the sovereign and government bond investment universe is so large.
Exactly.
But apparently it's easier to focus on corporates rather than
they left it to you and other managers investing in sovereigns.
And of course you get into the political space. And that's I think still a hurdle to take in the SFDR requirements.
Okay, maybe we could just wrap it up if that's all right.
Sure.
Are there basically, maybe a last question? Are there, what are the challenges? You mentioned that it's in terms of investing in sovereigns from a responsible investing perspective. It's advancing, and you've got some tools you've developed. But what are some of the challenges that the biggest challenges perhaps you see for yourselves? What do you think still needs to be worked on to get there on the journey?
like you mentioned, data, but also something we miss is more often taxonomy in the climate plans of sovereigns. Up until today, sovereigns write their own plans, and what we see is that they're all using different terminology and criteria, and so whereas the EU is working very hard on a taxonomy which is more related to corporates, it would be very helpful to have more of a taxonomy related to sovereigns, and that would make our work as investors and as analysts much easier to compare the climate performance, for example, of different countries with each other, and see if true progress is being made.
Well, thank you. Lots of work ahead still, but obviously we can see based on your we can see based on your presentation that a lot of work has been done already. So it's as you rightly say, it's a huge investable universe. So from a monetary perspective and breadth and depth, this as well perspective, of course. So well done for making good inroads on that. And so thank you again. Really appreciate your presentation. Really appreciate you and NNIP for hosting the session. And thank you.
And thank you for giving us the opportunity.
Oh, pleasure. Come back next year. So finally, I'd like to end the session with a quote that I hope will resonate with everybody, that we now understand that sustainable finance is not just another type of investment. It's a complete shift of mindset. Thought there. Our next session will start at 3 o'clock. It's hosted by Morningstar and it focuses on the EU Sustainable Finance Action Plan, 7 months into practice and many more to go. But this is an entirely physical event, I have to say, but we expect to make a recording available after the session, in a week or so. So thank you very much for your attention. Thank you again, Edith. Thank you again to NNIP, and have a great afternoon.